This was a response to writing off your Thanksgiving dinner and using Thanksgiving dinner as a tax write-off. Java code guy says, I can't tell if you're being sarcastic. There's a 0 chance this would pass an audit. So I wanted to talk about the 3 rules that you need to follow in order to completely pass an audit. The first 2, number 1, you have to have proof of the amount. Number 2, you have to have proof of the time and place. So 1, proof of the amount. 2, proof of time and place. These 2 rules are easily satisfied by having receipts. If you don't have receipts, you can show credit card statements or bank statements. But even if you have all the receipts and all the proof of all the charges, if you don't follow the 3rd rule, you'll definitely fail. And that is, it needs to be an ordinary and necessary business expense. It needs to have a business purpose. And corporations are required to have board meetings, annual, at least once a year. Sole proprietorships and LLCs don't have that exact requirement, but they can still set up a board and they can still have a board meeting and do it the same way that corporations do. If you document this meeting, take notes of what business items and topics were discussed, and everyone signs it, then you are golden. Of course, you can't be having board meetings every weekend. That's not ordinary and necessary. But once a year, maybe twice a year, having your board meeting, writing off the meal, writing off the travel that was needed for that board meeting, that satisfies the 3rd rule of having it have a business purpose. So those are the 3 rules. 1, you have to have proof of the amount. 2, you have to have proof of the time and place. And 3, it needs to have a business purpose.